GM and welcome to episode 44 of Cryptoticker, der Podcast. Today we are going to do things a little bit different again, and this is due to the big discussion around Bitcoin ETFs. And there is a lot of confusion, a lot of things that people are unaware of, and also a lot of history and explanation necessary, which is why we thought it would be nice and also helpful to actually do a deep dive episode into the world of Bitcoin ETFs. We're not only going to explain what they are, also we are going to talk about how the history is and where we are currently standing, also what's the chances and what's the risks for the future. So enjoy episode 44 of Cryptoticker, der Podcast. Today, we are unraveling the concept of Bitcoin ETFs, a topic that has been a buzzword in the crypto sphere for quite some time. So let's start at the very beginning. ETF, this stands for Exchange Traded Fund. In simple terms, it's a type of investment fund that tracks the performance of an underlying asset like stocks or bonds or also commodities and is traded on stock exchanges just like regular stocks. This financial instrument offers investors a way to invest in a diversified pool of assets without having to buy each asset individually. The beauty of ETFs lies in their simplicity and efficiency, blending the advantages of traditional funds with the ease of stock trading. But how do Bitcoin ETFs fit into this traditional financial structure? They are a newer breed of ETFs designed specifically to track the price movements of Bitcoin, the world's first and well-known cryptocurrency. By investing in a Bitcoin ETF, you gain exposure to Bitcoin's price fluctuations without the need to directly purchase or hold the actual cryptocurrency. This approach simplifies the investment process, bypassing the complexities and also the technicalities of buying and storing digital currencies. So let's dive a bit deeper into that. There are two primary forms of Bitcoin ETFs: spot and futures-based. Spot ETFs hold Bitcoin directly, aiming to basically mirror its real-time value. This direct investment in Bitcoin allows these ETFs to closely follow the actual price movements of the cryptocurrency. On the other hand, futures-based ETFs work slightly differently. They don't hold Bitcoin itself. Instead, they invest in future contracts. These are agreements to buy or sell a Bitcoin at a predetermined future date and price, speculating on what Bitcoin's value will be down the line. The distinction between these two types is quite critical because it does shape how they track Bitcoin's price and their overall behavior in the market. But did you know actually about the fascinating history and the evolution also of Bitcoin ETFs? Probably not. That's exactly why you're listening here. So let's have a look at how they've navigated regulatory landscapes and what their journey means for the future of cryptocurrency investment. So that tale, that story of Bitcoin ETFs begins with the broader context of ETFs in the global market. So did you know that the total trading volume for ETFs across major markets like the US and Europe and Asia exceeded $12 trillion just in the third quarter of 2023. That is a massive and staggering number showing the immense popularity of ETFs. But when we zoom into the world of cryptocurrencies, the trading volume itself was around 1.2 trillion in the same period, which is just a fraction of the ETF trading volume in the US alone. This gap signifies that there is an immense potential for growth and for integration of cryptocurrencies into these traditional investment avenues. So if we turn back the clock a little bit, the journey of Bitcoin ETFs in the USA has been particularly interesting. The USA, known for its advanced financial markets, has been the center stage for the push towards a Bitcoin ETF. These ETFs aren't just about providing another investment vehicle. They're more about bringing the benefits of regulated, transparent, and secure investment options to the world of Bitcoin. The SEC, which stands for Securities and Exchange Commission, plays a very important role here. So they are examining these ETF proposals with a focus on investor safety, market stability, and also legal compliance. The first notable attempt to launch a Bitcoin ETF was already back in 2013 by the Winklevoss twins, founders of the Gemini crypto exchange and probably most known also for their whole investment within Facebook. They envisioned an ETF that would make investing in Bitcoin as easy as buying stocks, but that journey wasn't really smooth. The initial draft for a Bitcoin ETF faced several revisions influenced by events like the Mt. Gox collapse and the Bitfinex hack, so quite a few of those negative news. And despite these efforts, the SEC rejected their proposal in 2017, citing basically high risks due to volatility, potential market manipulation, and the lack of market regulation. Over the years, the SEC's stance seemed unchanged. More than a dozen of Bitcoin ETFs faced rejection, with the SEC highlighting problems like lack of investor protection and others. This trend more or less reached a peak in around August 2018 when, in a single day, the SEC rejected 9 Bitcoin ETF applications. This was a significant setback, leading to a decrease in new applications due to growing skepticism, which is understandable. However, the dream for a Bitcoin ETF in the USA remained alive, but the tides also began to change a bit. In 2021, under the new chairman Gary Gensler, there was a renewed wave of optimism initially. Gensler, who had previously criticized the SEC's inconsistent approach toward Bitcoin ETFs, particularly the disparity between the approval of Bitcoin futures and the delay in approving spot Bitcoin ETFs, now led the SEC with a more cautious stance. Despite his earlier, more open stance on cryptocurrencies, his regulatory approach as the head of the SEC has been marked by a rigorous focus on investor protection and preventing fraud, oftentimes resulting in the postponement or denial of ETF applications. This shift highlighted that the complexities of the regulatory landscape in the crypto market were still a big topic. In the summer of 2022, there was another pivotal event occurring. Grayscale, a major crypto investment company, filed an application to convert its Grayscale Bitcoin Trust into a spot exchange-traded fund, basically an ETF, a move that could have major implications for Bitcoin's mainstream adoption. However, the SEC rejected this application once again, sticking to their stance of prioritizing investor protection against potential market manipulation. This decision prompted Grayscale to take a significant step, basically suing the SEC. And this lawsuit was not just about Grayscale's business interests. It basically represented a broader challenge to the SEC's handling of crypto-related products. Short break. If you like this episode of Cryptoticker, hit the pause button and leave us a rating and a subscribe. This helps us quite a bit as a podcast, and we appreciate any feedback. And if you need more insights and info after the episode, just check out cryptoticker.io. There you can find everything about cryptocurrencies, Web3, NFTs, and much more. Already since 2015, the Cryptoticker team has been taking care of offering newbies and pros a home in the crypto space. On cryptoticker.io, you will find new articles and insights every day, packed with news, tips, background info, and exciting insights. In the Cryptoticker Discord, you can exchange ideas with thousands of like-minded people, ask questions, make contacts, and much more. Take a look at the show notes right now, because there you will find all the links to Cryptoticker and you can directly become a part of the community. And now enjoy the rest of the episode of this Cryptoticker podcast. The rejection of Grayscale's application and the subsequent legal challenge brought to the fore the ongoing debate about the SEC's approach to cryptocurrency regulation. Critics argued that the SEC's concern about what market manipulation and other things were actually quite inconsistent, especially since they had approved ETFs based on Bitcoin futures contracts already, right? These futures-based ETFs were subject to similar market conditions as the proposed spot ETFs, raising questions about the SEC's rationale and their whole reasoning. Moreover, the SEC's approach was seen as rather reactive than actually proactive, often regulating through enforcement rather than through the approval of regulated investment products like ETFs. And this was basically a controversy which underscored the need for a more consistent and also transparent regulatory framework for both cryptocurrencies and related investment products. While the US has been, grappling and having issues with regulatory hurdles, other countries have seemingly been more welcome of Bitcoin ETFs. There was Canada and some European nations that had already launched Bitcoin spot ETFs and providing investors with regulated vehicles to gain exposure to Bitcoin. For instance, in Canada, there's the Purpose Bitcoin ETF and 3iQ CoinShares Bitcoin ETF. And they hold Bitcoin and have been trading on the Toronto Stock Exchange. Then there's also the Jacobi FT Wilshire Bitcoin ETF in Amsterdam. And these developments are seen as crucial because they not only broaden the access to Bitcoin investments itself, but they also set a precedent for other countries, including the US. Back in the US, the SEC stance has been more conservative, but in the last couple of months and in the last year maybe, there have been some breakthroughs. The launch of the first Bitcoin futures ETFs, like the ProShares Bitcoin Strategy ETF or the Valkyrie Bitcoin Strategy ETF and VanEck Bitcoin Strategy ETF, they really marked significant milestones. These ETFs, which focus on Bitcoin futures contracts rather than the cryptocurrency itself, they opened up some new avenues for investors. They represent a step towards integrating Bitcoin into more traditional financial products, albeit indirectly. In the midst of these developments, BlackRock, which is probably known to many of you, the world's largest asset management company, they made a move that could potentially change the whole game. In June 2023, BlackRock filed an application for a spot Bitcoin ETF, which is seen as a significant step given, their stature and their name in the financial world. This move by BlackRock brought a very fresh wave of optimism to the whole community. I mean, we see it everywhere with the expectations that it might actually accelerate the approval of spot Bitcoin ETFs in the US. And BlackRock's entry into this space is not just about another financial product. It's more about adding legitimacy to Bitcoin as an investment asset and possibly also attracting more traditional investors to the market. However, it's quite crucial to understand the broader implications of these developments. The introduction of Bitcoin ETFs and especially spot ETFs like the one proposed by BlackRock offers a more direct way for investors to engage with Bitcoin. And this could actually increase Bitcoin's liquidity in the market and potentially also affect its price. But it also brings quite a few challenges, such as the risk of increased market volatility and also regulatory complexities. BlackRock's application and also the SEC's response to it, they could be really important in shaping the whole future of Bitcoin ETFs and thereby, by extension, basically, the cryptocurrency market as a whole. The landscape for Bitcoin ETFs, especially in the United States, therefore remains in quite a fluid state. However, with the increasing interest from major financial players like BlackRock and also the growing acceptance of cryptocurrency as a legitimate asset class, we actually may soon witness that breakthrough of spot Bitcoin ETFs in the US market. And this would be, quite a significant moment, potentially also opening the floodgates for, widespread institutional and retail investment in Bitcoin. But with those new opportunities, there are also some challenges. The arrival of Bitcoin ETFs, particularly spot ETFs, may usher in a new era of market dynamics. These products could increase Bitcoin's market liquidity, possibly leading to greater price stability. However, they could also introduce new risks, such as increased market volatility and regulatory uncertainties. The key will be balancing these factors to ensure a stable but yet progressive investment environment. If we're looking ahead, the role of the regulatory bodies like the SEC will be quite important. A clear, consistent, and also forward-looking regulatory approach will be essential for the healthy growth of Bitcoin ETFs, and this includes addressing concerns around market manipulation, ensuring investor protection, and providing a transparent framework for these products. The hope is that as the market matures, so also will the regulatory landscape, basically paving the way for more innovative and secure investment options. Finally, also, the broader implication of Bitcoin ETFs on the cryptocurrency ecosystem, they cannot really be overstated. They represent a significant step towards the integration of digital currencies and cryptocurrencies into the mainstream financial system. This integration could fuel further innovation, adoption, and perhaps even stability in the crypto market. As we watch this evolve, one thing is also clear. The journey of Bitcoin ETFs is far from over. It's a journey that could really redefine that intersection of technology, finance, and also regulation. And, well, that basically brings us to the end of today's deep dive into the whole world of Bitcoin ETFs. I do hope you found our journey rather interesting and you really learned something here. And for those of you who are eager to dive even deeper, we've got a very comprehensive article on our website. I will just post the link in our show notes so you can check it out for yourself. There is a lot of additional insights, details, what I did not cover in this episode. Also, I would really like to invite you to our Discord community. It's a great space to continue this conversation and generally share your thoughts and also get in touch with others, connect with fellow enthusiasts. The link is also in our show notes. And before I actually really sign off, I just have a quick question for you guys, our listeners. If you enjoyed this style of episode, this would be super nice if you could give us some feedback. We're always looking to improve and also deliver content that you find valuable and engaging. So please let us know your thoughts. You can also do that in our Discord. And with that, I'll end it today. Thank you very much for tuning in to Cryptoticker, der Podcast in episode 44. And make sure to also follow us for some more insightful episodes in the future. And until next time,